Hey everybody, this is Jose Blasco. How are you everyone? We are about to get started. It's 15 seconds to go and we begin with our live CFD trading session. So get ready my friends, it's time to get started here. A quick confirmation on the chat box that sound is good would be appreciated. So if you could just type hello, okay. I know you are probably joining at this moment in time the stream, so maybe you are just catching me mentioning the sound check. But that would be great if you could just type a quick hello on the chat box so I know you hear me well and we are ready to begin. So again, welcome to the session, everybody. My name is Jose Blasco. Today is October 31st, 2022. This is our multi-asset CFD trading session live. CFD, which stands for Contracts for Differences. Probably many of you know about it, but this is not a product available everywhere in the world. And therefore, to some of you, especially if you are in North America, probably that may be something new to you. For Europe, Asia, etc., those are very popular, very commonly traded products, very powerful as well, as we could certainly enjoy the power of leverage. And of course, one of the purposes of the session today is also to guide you into how to plan the trades properly. So while you are using leverage, risk is contained. You have a plan around what if the market goes against me. And while we're trading leverage products, it's not like we are fully exposed to the maximum pain in our accounts. Actually, it's the complete opposite. We will have a complete control of risk, which is a fantastic thing to do. How are you, Ashton? It's good to see you. Nice to see you from South Africa. That's very nice. Jeff, how are you, my friend? It's good to see you. Everyone attending the session, is my pleasure to guide you today, and for sure if you're watching this recorded, my pleasure too, even though I wouldn't know. Now the sessions are running live every Monday, and talking about going live, starting next Monday, we're going to change the time for the sessions from 9 p.m. Singapore time to 7 p.m. Singapore time, so a couple of hours earlier, since in certain parts in the world, time zones, I should say daylight saving times have started, and in that sense it's going to be more convenient starting next week to have this change of time. So we'll do the sessions live 2 hours earlier. So let's begin, and first thing, as always, probably the least fun but very important is our financial disclaimer. So please read it carefully. It is important. It is important information indeed. Trading, as I said, carries risk. We are trading leverage products here. So again, not to scare anyone, to be honest, risk equals opportunity if you contain the risk and you have that under control. So it's beautiful, but at the same time, it's what we're doing here is serious stuff, okay? And because what we're doing is serious, I need everyone to be focused, everyone to understand the risk and the legalities involved. Trading in general and specifically CFDs. The session, as you can see on the bottom left, is in partnership with CT Index, which we thank you very much for being our partner. And obviously, we're going to be trading all sorts of CFDs, as the name of the session suggests, multi-asset. We'll be looking at indices, we'll be looking at commodities, we'll be looking at currencies. Again, a collection of different CFDs, okay? And again, you feel free as well. You can see in the bottom part of the screen the URL for you to go, tradewithufos.com/CTindex, in case you'd like to learn more on CFDs. Okay, there is plenty of information on the CT Index page. Okay, so you can go there and take a look. Ashton, we do not use a Telegram channel. Well, Telegram is a great tool. It's often very, very often used as a, let's call it a trading signal, trading picking service type of thing. My goal today really is to take you to the next level. My goal is not to spoon feed you trades. My goal is to give you the tools and the processes and guide you into how to plan trades, so you learn how to plan trades for you for the rest of your life, and you can do many, many, many instead of just a few trading signals on a Telegram channel. Nothing wrong with Telegram channels, but I'm just saying that's not what we're doing here today. Okay, so today my goal is to help you to become independent and not to depend on external sources of information such as a Telegram feed. Okay. Anyway, agenda. We're gonna get ready to trade. We're gonna be looking at Forex, indices, share, commodity, CFDs, metals, gold, etc. All of it. Please feel free to interact with me during the session. Do not be shy, even though in the agenda it says Q&As at the end. Doesn't need to be like that. I'm sure I will have questions for you. So when I ask you questions, please get back to me on the chat box. Let's interact. And same thing, I'm sure you'll have questions for me as the session progresses. Feel free to interrupt me. If the answer is coming later, let me be the one to tell you, but let me know what's your concern at that moment in time so I get your point, so I can then, during the session, help to reinforce the concept or whatever is it that you need. And again, let's team up, let's work as a team in this 1 hour session that we have in front of us. Good. So we said the session is in partnership with CT Index. Know that CT Index is running a couple of promotions as we speak. There is a CT Index rewards and benefit, a set of features, as well as the knockout options promotion, which implies that if you open an account, you fund a certain amount, I believe is $2,000, and then you take a couple of trades, you get, I think it's like 10% cash back, it's $200, something like that. Read it on the webpage because it's going to be more detailed, more complete, and updated. What I just said, I believe is correct, but I may not be fully accurate. Okay, so take a look. Just scan those QR codes so you can go there and take a look at it for yourself. For the ones of you watching this recorded, maybe I said all of this too fast, so later in the session I may get those QR codes again on the screen so you don't miss out on those promotions because they are cool. But at the same time, I am now eager to jump on the charts and get to look at the real-time markets. And here we go. Okay, so we're going to start here. I'm going to take a sip of water if you don't mind. Thank you for that. And we begin. So let's get ready to trade. Okay, so that was the first item on the agenda. Okay, getting ready to trade. So first of all, let's talk about technology. I am using TradingView. The TradingView, that the platform that you see on the screen is TradingView. You probably know that TradingView is a charting service that you find online on a web page called tradingview.com. TradingView is not a broker, and you can use TradingViews in different ways. One way to use TradingView is just to do your chart analysis, and then you turn around, you use your CT Index mobile app, for example, and you place your orders. That's one way to do it. Another way to do it would be to go ahead and connect TradingView to CT Index, which could be done very easily. And then you get the market data as well as the execution through TradingView, okay? Through CT Index from TradingView. So let me show you this in a moment, okay? Give me a second, guys. Thank you for that. There was a bit of background noise. I apologize for that. So notice on the bottom part of TradingView, there is a tab titled Trading Panel. If you click on that tab and then you move to the right, I got CT Index here on the right, you click Connect. It's going to ask you for the credentials for your account. Of course, if you don't have an account with CT Index, you can always set up a demo account on their website. You can use the link in the bottom part of the screen, as I mentioned before, for you to get there and set up your demo account. But basically, don't need this. So basically, the moment you enter your credentials and click Connect, you will see that word Trading Panel changes to become CT Index with a green dot. What does that mean? That now you are connected to CT Index, and this, by the way, this same process applies to other brokers available with TradingView. But again, the beauty of CT Index, really, it's number one, it's a very well-regulated broker. Number two, I mean, I could do a long list, okay? It's not about promoting CT Index, but really, there are many advantages. I mean, it's a company under the umbrella of StoneX, the StoneX Groups, which is the largest FCM in the world. So we are not talking about a small broker. We are talking about very fine executions. Professionals use them. And that's why, apart from being very happy that, our company and CT Index, we are partners, apart from that, I am definitely very happy to do my market analysis utilizing that data feed. Because if you do not connect TradingView to CT Index the way I've done, and you load, let's say, for example, the Euro US dollar, right? So if I type Euro US dollar, for example, and I am not using CT Index, right? I uncheck. Well, if you do that and click all, so you have so many data feeds coming from all sorts of brokers, which some of them may be okay, some of them may be less okay, whereas when you click CT Index, right, now the data feed is coming from CT Index. So again, it's very fine data feed, very fine execution, and all of that, as I said, okay? So that's why, you will see me utilizing CT Index in the session, and that's how you connect it. It's very simple, because now when you load the symbols, you got the market data coming from them, and when you trade, okay, you just use the order panel, And now, even though I am using TradingView, which is not a broker, it's just a software, because my TradingView is connected to CT Index, this is now being routed to CT Index, which means that, let me bring this here, which means that if instead of using TradingView, I had used the web trader, which is the CT Index platform on their website, so all these orders I got in the system here, okay, all those orders, okay, would be seen in TradingView too. Notice that if let me make some space here, but if I go back to CT Index and I click on orders, okay, I got orders there, the Euro, Wall Street CFD, I got multiple orders here in the system. Those orders that I see inside TradingView, one last time, are the same that you see inside the web trader, okay, New Zealand dollar, Japanese yen, Wall Street CFD, and the Euro. Those are the orders I had in the system, okay? So, by the way, and I'm not showing it on the screen, but let's say if I was to look at the CT Index mobile app, you would also see the orders I placed from TradingView on the mobile app. I would see it there too. So again, why am I using TradingView? Well, because it's a very advanced platform. It's very easy to use. It can be running in a web browser. So if you are on the go, if you're traveling, as long as you got a web browser, you can plan or watch your trades. It also works on a mobile app, and it also works on a downloadable platform, which is what I have on the screen is actually a downloadable software, which I don't have to. I could just use a browser, but just out of gaining more stability on my computer, I use the downloadable version of TradingView. And then finally, the other reason why I use TradingView is because I can enable our technology, which are the UFOs. You see them there, red UFOs, green UFOs. You'll see in a minute the auto climate. So those technologies are going to help me to plan trades at the speed of the light. And you will see how I do that, multiple times in the session today. And those will be valid trade examples based on the methodology I use for my own trades. And for sure, if you want to use those for practice purposes, that is obviously your decision to use them, not to use them, to use real money, paper money, a large size, a small size. All of those are your decisions. But again, as said, I'm here to support and explain the rationale behind the trades and to support you as a trader. So if you have questions, feel free to ask. So a little bit of a lengthy introduction here, but I just wanted to make sure that you all understand what is it that I have on the screen, what is it that I'm going to use and why. And with all of this said, now I'm ready to begin. Okay, so a quick look at the chat box. You use your options app to analyze my charts, but only sometimes. Got you. So again, this is personal preference and everybody's different. I love the mobile apps to take a look at the chart. I love the mobile apps to even move my stops or something like that, to take a peek at my trades. But when it comes to planning a trade, I personally appreciate much more to have more kind of like a more real estate space in front of me. One monitor is good enough. I mean, you can use 5 if you like, but I would say one monitor is good enough, and certainly much better than the screen of a phone. Even if the phone is a large one, I would say trading is in a way visual, and my preference is to plan the trades on my computer, and then certainly to place orders on the phone. I have no problem with that. But when it comes to the use of the charts, I certainly prefer to use my computer, and in this case, TradingView, okay, which is the reason why I'm doing it like that with you today as well, okay? So, so we got the introduction, okay, and let's begin now with looking at the trades. As I've done in prior sessions, okay, I'm going to start with trades based on swaps, so Forex swaps. These are semi long-term applications of trading. This is not short-term trading. So I'm going to start with looking at swap trades, which are going to be based on the weekly time frame. So I'm going to change the time frame on the left to be weekly. I'm going to look at weekly time frames of certain currencies and look for longer-term trading opportunities where I am in those trades for a long time. And while I am in the trade, I'm being paid swaps in a daily basis, okay? Maybe I get paid every 3 days, but the payment is 3 days payment, right? So it's kind of like you get paid every day. So that's what I'm going to do. I'm going to start with this type of application. Again, this is not for the ones of you who want to be very active. If you want to be very active, just bear with me. After I'm done with these trades, which are more on the passive side, investing type of trading, then I'm going to move into intermediate term and then short-term intraday. and I'm going to cover all trading styles with different assets, currencies, indices, commodities, etc. Okay, but again, just for you to know where I'm going, because it's not like we have been running the CFD sessions in partnership with City Index for too long, and some of you may be new to the sessions and you may be wondering why I do things the way I do. So again, I'm just giving you answers before you ask. Okay, so we got a list of swaps. Okay, and those are negative swaps, meaning that, for example, if I take a trade on the euro pound to the short side, right, I'm going to get paid swaps while I am in the trade. Now, if I go long the euro pound, then I'm going to have to pay swaps. I don't want to do that. I want to be paid swaps instead of having to pay for the swaps. So the euro pound trade is there, okay? But unfortunately, when I look at the climate, okay, and these, we talked about this in past sessions, but I'll give you a quick summary. So when we look at the climate on the weekly time frame, notice that it's a red climate. So that's good because it's a negative swap. So you get paid swaps when you short. And because the climate is red, that means it's a good climate to be a seller and shorting. So you would think, okay, time to go, let's go for it. But at the same time, if I zoom in and I remind you, so notice how sometimes the climate will show you those thick dots, and sometimes the climate will show you those thin dots, which is the case today with the euro pound. And what does it mean that the dot is thin? Well, it means that there is a directional component, but given the price action that we have in front of us, that directional component does not provide a statistical advantage for us to trade in any direction. So if you wish, there is a little bit of an extra odds of success if you were to be a seller, but it's not confirmed. It's not a thick dot. And therefore, I'm just going to pass and go for the next one, which is the Euro New Zealand dollar. I want to see full compatibility. Negative swap with the thick red dot. In this case, we got negative swap with a blue dot. So that's contradiction, okay? And I need to wait for a change of climate, so no trade there. The Euro Sing dollar is also a negative swap with a blue dot. So again, contradiction, we're gonna pass. The Euro Aussie, blue dot, contradiction. The Euro CAD, blue dot, contradiction. The Euro US dollar, a blue dot, contradiction. And the US dollar Mexican peso, red dot. But again, it's a thin dot. It's not a thick dot. So we don't have enough statistical advantage by going short. So this week, for the Forex traders with a investing mindset, willing to take advantage of swaps, shorting is not something that we should be doing, maybe going long. So let's go ahead and take a look at the list plus swaps, and let's analyze what is it that we have. So we got the Kiwi Swissy, which is showing us a blue dot. That's good. But again, it's a thin dot. It's not thick. And because it's not thick, again, the statistical advantage is limited. So passing would be recommended. The next market, which by the way, we have a trade waiting to get filled here, is the New Zealand Japanese yen, which that one give us permission to trade because we have a positive swap and a blue and thick dot. So we have permission to trade. Okay, and by the way, we did plan a trade last week. Notice how last week the market went to the moving average. The blue line was where our entry was. Notice how our entry was here at 83.44, and it looks that, you know, price came, you know, as close as let's call it 84. So that market didn't go down enough to get to our entry where we expected the bounce to happen. It bounced prior to that. So what can we do? Can we re-update this potential trade opportunity and maybe we end up modifying the trading plan? Well, certainly on the City Index web trader, we have this trade here with New Zealand dollar, Japanese yen, and you know, this trade is a trade that, you know, we need to get canceled. So if I edit this trade, okay, I can delete the order altogether because I'm going to replace it. I'm going to reanalyze that market, New Zealand dollar, Japanese yen. So let me remove it because we placed it last week and we did not get filled. By the way, last week we got filled on the US dollar, Japanese yen. That produced $567 of profit. That was like a 5-to-1, more than 5-to-1. We were risking 100. In other trades, we lost 100. This trade made almost 600. So beautiful, because that made us positive overall since the beginning of the times when we started our live trading sessions. We are definitely positive, so that's nice to see. Losses are to be expected, but that's why we play with larger profits against smaller losses. So if we take a few small losses, it's fine because a big profit will erase them. So we are managing our risk in this fashion, okay? And here with the New Zealand dollar, Japanese yen, 1 week later, we can see how the EMA has been updated and is now located at the highest price point at 84.47 to be precise, something like that. Okay, 87.47 more or less. That's where the EMA is. It's our reference. Okay, that value of 84.47 is what I'm looking for here with the blue line on the right. So what I'm looking for now is I'm looking for UFOs that are enveloping that blue line. And on the daily time frame on the right, I don't have it. But what about on the 4-hour time frame? Oh, sorry, not this one. I just clicked on the wrong chart. What about on the 4-hour time frame? Well, on the 4-hour time frame, I don't have it either. I have a UFO located at 83.43, but I don't have any UFO located here around 84.5. I don't, okay? Probably I did have before, and that's how price came down and from there moved back higher. But again, maybe if we plan this trade together last Friday, something like that, it would be fine with being a trade. But doing it today together, we don't have a valid opportunity with the 4-hour time frame. So I'm going to look at the last one, which is the 1-hour time frame, to see if we have an opportunity. Maybe we do, maybe we don't. And it seems that we don't. Okay, we have UFOs much lower below, okay, located here at 83.43, but not where the blue line is. So again, what it is, we cannot change market data. Of course, it's more pleasant when you load a chart and the trade is waiting for you. But let's face it, the job of a trader is to stack odds in your favor. And therefore, we should be ready. And normal thing to happen would be to say no to the trade more often than we say yes to the trade. And therefore, happily, I'm going to move to the next one, which is the Aussie Swiss, which is a positive swap. The climate is red, so I'm going to pass. Aussie Yen, which is confirmed climate to the upside. Okay, so this is good. Blue and thick dot, so ready to plan on a trade. For the yen, we're talking about 94.00. This is the location of our horizontal line there. And when looking at this horizontal line projected on the right, on the daily time frame is also falling here a bit in the middle of nowhere. But what if we look at the 4-hour time frame? Do we have a UFO? Well, there is a UFO right above, but it's not enveloping that blue line. What if you look at the 1-hour time frame? Okay, if I look at the 1-hour time frame and I move this higher, again, this blue line happens to find itself lonely with no reinforcement of any UFO. And this is dangerous, guys, because this is when this type of market movement happens. This is when the market goes through the EMA, like the EMA is not there, and then it comes back up, right? And then it goes to the EMA and bounces again. But why didn't it bounce here, right? And it's because you have a line, which is certainly relevant. The blue line is the EMA, so that's relevant. But it's relevant as a reference, but it's not relevant from the point of view of turning the market around. That only happens with the on-field orders, and unfortunately, there are none with the Aussie yen at that price. So we need to wait until they show up or go trade another market. So let's take a look at the Sing dollar Japanese yen, which I'm going to pass because this market has been running for so many blue candles that probably is reaching exhaustion. So I'm going to go for the next one. CAD Swiss, thin dot, CAD yen. Very good. The CAD yen is showing us a thick dot. So happy to work on planning the trade here. So we are talking about 107.15, something like that. Oh, I just clicked in the wrong place. Sorry for that. 107.15. More or less here. There we go. Good. So very nice. So, sorry guys, just hit the wrong key combination. So what do we have here? We have the Canadian dollar Japanese yen, and what we have here is a blue line which coincides very well with that UFO. Okay, so now we have a setup. That's the 1-hour time frame, by the way. So I would prefer to start my analysis with like a daily time frame to see if we find something a bit larger. On the daily time frame, there is nothing. What about the 4-hour time frame? The 4-hour time frame has a UFO below, but not there. But the 1-hour time frame has one. Okay, the 1-hour time frame has one. So I am keen to get ready to plan a trade on this one. Okay, now having said that, I am looking to plan on a trade for a multi-week movement while I get paid swaps. And since I am planning on my climate to be located on the weekly time frame, so having an entry at 42 with a stop at 10, that makes a trade with a 30 pip risk, which is a very, very little amount of risk, which is fine for intraday. But given the fact that I'm looking for a longer-term trade, I would prefer to enter my trade at 107.85 with a stop located all the way at 107.10 and below. It's going to be a larger zone. It's going to be a greater risk, but much more compatible with a long-term type of market opportunity. I mean, I wish I had found UFOs on the 4-hour time frame or the daily, but I didn't. So I'm going to tweak the 1-hour time frame this way to hopefully get a trade that is more in line with the trading style. So 107.95, that's going to be my entry. My stop is going to be below 107.10, so I'll make it 107.05. Okay. And then the target, okay, so for the target, I'm just going to go ahead and turn on the UFOs on the weekly time frame. There is no UFOs there on the weekly time frame. What about the daily time frame? Do we have UFOs above price? No. What about the monthly time frame? No. So no UFOs. So what I'm going to do is I'm going to turn on a Bollinger Band and set the upper band, which is 109.22. I'm going to set that as my target. Okay, now, I'm not very happy about this in the sense that this is giving me a 1.41 to 1 trade. Okay, so this trade is of a much lesser quality from a reward or to risk ratio from a risk management point of view. This trade is of a much lesser quality compared to other trades that we have taken. But as long as you're okay with 141 to 1, so take it. Okay, if you are not okay with that, then we will pass and we will look for another currency pair to trade. Because I'm here for multiple reasons, and one of them is to guide you into practice so you develop your skill. This is a coaching session, isn't it? So I'm just gonna take the trade. Again, it's not like I'm amazed. Last week I was happier with the 5-to-1s and things like that. But at the same time, also the nearer the target, the more likely we get there. So certainly I'm gonna be happy to expose myself to this risk. In my mind, it's not a crazy thing to do. Okay, so here's the trade. Okay, if I move this to, let's say, a daily time frame, so we have a better view. So you can see how my entry is 107.95, my stop 107.05, my target 109.22. And if I bring back WebTrader, notice how we got the Canadian dollar Japanese trade here that was not there before, now it's here. Okay, so this is the trade I have just entered. Good, so let's take a look at the remaining currency pairs in the list. Okay, and I'm moving quickly, guys, because we need to change style. So not this one. This one is a bit far, so I'll leave it alone. Swiss franc has been running for a bit too long, and the US dollar yen too. Okay, good. So look, I guess it's good enough. Okay, we got the Canadian dollar, Japanese yen. This is a longer-term trade where while you're in this trade, you're gonna get paid swaps, which is good for long-term investing. And therefore, now I'm moving to the City Index watch list I have set up with other markets such as the S&P 500, which I'm going to analyze now from a daily time frame point of view instead of weekly time frame point of view. So I'm becoming a little bit more active here now. Okay, and we can see how this market, it's currently in an up climate, which is confirmed, and we talked about it last week, by the way. We've been in this climate for 6 candles. Statistics suggest 9 is a normal thing to happen. So I would not be surprised to see the market come back to the EMA and bounce for a bit more. So the question is, look, if that market was to bounce from the EMA located at 38.10, so do we have a valid entry? Okay, and notice how on the daily time frame this coincides almost perfectly with a UFO, which is great. But I'm going to try to make that a bit smaller. On the 4-hour time frame, we got nothing. On the 1-hour time frame, we got a UFO right there. Okay, so I'm going to use this 1-hour time frame UFO, and when it comes to setting targets, I'm going to go. I'm not sure if this target is going to be a bit too close. Okay, the red UFO seems to be very close. I mean, you can see how price has kissed the UFO and started falling right at the open on Sunday night in the US. So let's place an order so I can evaluate my reward and risk ratio. So if we enter at 38.17.4 and my target is 39.10.5 and my stop is 37.10, So it's 66. So we are talking about a 1.8 to 1. Okay, so it's not a trade that is either too good or too bad, but it's okay. Okay, so as always, my desired risk is 100. By the way, I didn't set the desired risk earlier with Canadian dollar Japanese yen trade, so I'm gonna have to go and change that. So I'm risking $100, and with that, TradingView calculates my size automatically, 1.8. US market just open, and this trade is a trade I'm just gonna place here. Okay, so getting the trade in. Here we go. So we got entry 38.17, stop 37.66, target 39.10.5. Okay, this is the plan for the trade. So a quick one. I need to go back to the Canadian dollar Japanese yen trade because I just realized, my bad, that I did not set the right size. So we set target 109.22. Sorry, that's the entry. 107.95. Target 109.22 and stop 107.05. So this is the trade. And what I did is I forgot to type here 100. So I tell the system I want to risk $100. Okay, I didn't do that. So let me cancel the prior trade I had. Okay, Canadian dollar, edit, delete. Okay, and now I'm just gonna re-enter the Canadian dollar trade. So buy with $100 of risk. Here we go. The trade is in, and now you can see Canadian dollar is back now, but with the right size. And by the way, the Wall Street trade, let me cancel those because those are from the last week and we did not get filled. So I'm just gonna cancel them as well. So we clean up the account because of course we need to go and revisit those charts to confirm the opportunities are still valid. Which I will do that later. Okay, so good. So back to the city index list. Okay, so what did we do so far? So we had a trade with the Canadian dollar Japanese yen, which is a trade based on a weekly time frame, a trade designed to collect swaps while we are in the trade. This is a long-term investment type of application. From there, we moved into the S&P 500 CFD trade. This one is a bit more active because instead of using the weekly time frame that is on the left, I am using the daily time frame, D for daily. So we are looking at a daily climate with an entry set on the 1 hour time frame here on the left using that green UFO. So yeah, that's what I've done, isn't it? So we got two trades in today's session so far. One is more passive, one is a bit less passive, okay, based on the daily time frame. And now I want to become just a bit more active, okay? I'm going to drop now my daily time frame to 4 hours, okay? So I'll keep dropping the time frames to make myself a bit faster, a bit more active. And with that, we already have a trade on the equities. So I'm going to move to another market, which is going to be crude oil. So we're going to look at the commodities and see if we have something that potentially is tradable. So let's take a look, okay? And as I'm going to do that, I'm going to take a sip of water. And as I'm taking a sip of water, I don't see any questions on the chat box, which I guess it means that you guys are busy listening or maybe practicing and drawing the lines on the chart and doing the order placement and basically learning from the session. Okay, that's my goal, to help you to be able to do that by yourself when I'm not around. But also, I'd love to ask you, how is it going so far? Because so far I have been moving fairly fast, and I'm concerned that maybe I'm losing someone. And again, this is a coaching session. I'm happy to go back and revisit the prior trades and re-explain if you need me to, or if you need me to slow down in the next trade, please let me know. Or if you have any other question, I would also love to know. Or by the way, if all is good, please just type all good on the chat box. I would love this. I'll take a sip of water and I'll take a look at the chat box. Thank you for that. And we continue. Okay, so I don't see much in the chat box, so I guess that means we are doing well. Okay, cool. I see Jeff, thank you for that, my friend. I see a few new names, okay, and because some of you may be new to the session, or maybe you have been watching us recorded. But maybe you are a bit in the shy side. It's like, hey, I have this basic question I done there. Hey, this is a coaching session, okay? And I was myself one day, long time ago, I was a student of the market, right? So I know what it is to have basic questions, and please do not feel, any sort of intimidation or anything like that. Anything you need, just speak it out, okay? I'm here to help, and just phrase your questions. And again, happy to help, okay? So please do not be shy. These sessions are precisely for you guys to learn, okay? Cool. So let's continue. So we are looking at crude oil, okay? So what do we have with the crude oil? Well, with the auto climate here on the left, we are looking at a confirmed climate to the downside, okay? It's a confirmed climate to the downside. And by the way, I didn't say it, okay? But auto climate is a tool which is free, okay? It's a tool which is free. So you guys can go to our website and you can just select it on the apps section of our website. Select it if you are not having it yet on TradingView, and you just go through the registration process for auto climate. I'll give you a little freebie here. So there is a coupon code which is claim8. So use that coupon code, and with that coupon code claim8, auto climate is free forever. Okay, so you can get your auto climate, which is going to help you to know if it's time to be a buyer, if it's time to be a seller, if it's time to not to trade, like when it's not confirmed, when the dot is thin, no trade, right? Which is just as important as knowing if you should be a buyer or a seller. Knowing when is not the time to trade is also very important, maybe even more. So, just subscribe to your auto climate there, and our activations team will get it ready for you. And that way you can also replicate what I'm doing any other day of the week by yourself, okay? Which is the ultimate goal, that you guys become independent. So climate is confirmed to the downside. So we want to be sellers of crude oil. The reference point for us to sell would be the black line at 87.18 or something like that, okay? This is where the black line is the moving averages, which, I project with a blue line. So the moment I do the blue line also shows on the chart of the right, which is the 1 hour time frame. And notice how on the 1 hour time frame, I don't have any red UFO. Okay. What about the 15-minute time frame? We have a red UFO lining up here with the blue line. So in other words, if crude oil keeps rallying all the way to 87.07, so the expectation is that the on-field orders will kick in, the on-field orders that may be added because the moving average too, okay, and crude oil may fall. And the idea will be to catch this turning point, with a proper risk management in place, and price is approaching. So hopefully we can get the feel before the session is over. So let's look at targets before anything. So if I take a trade on crude oil, the target is going to be the green UFO there. Okay, the green UFO is located at 85.86. So 85.86, and by the way, this will be to sell. So 85.86.0, very good. And the entry would be our red UFO there at 87.07.7, with a stop located at 87.32.7. That's the top of the UFO. We're going to give it a little bit of breathing space. We'll make it 33.3, something like that. Okay, so that will produce a trade which is a 4-to-1. This is much more of my liking. The other trades that we had today were 1 point something to 1. This is like a 4 point something to 1, much better. And I'm also willing to risk $100 per trade. So I'm going to type 100. Okay, and if I'm right, I'm going to make 365. If I'm wrong, I'm going to lose 76. Okay, so that's the plan for this trade. And I'm just going to enter the trade, and you will see the parameters on the screen. In case you didn't make a note, you will be able to see now. Short at 87.07, stop 87.33.3, target 85.86.0. Okay, so this is the trade that we are planning to execute on oil, which is already in the market. Okay, and you can see how fast it is to find a trade when you use the auto climate and the auto UFOs. It really takes no time to either discard or approve a trade, and then you place the order with the order panel. You type 100 if that's the risk you want. You type 10 if that's the risk you want. You type 1,000 if that's the risk you want. And we're all different. I'm always using 100 for all trades, so that way it's easy for you to kind of understand what I'm doing and easy math. But of course, I understand and assume that everyone attending the sessions, either live or recorded, have accounts with a different size, and you may execute with more or less risk as well. Okay, very good. Appreciate your message, Ashton. Thank you for that. Listening very close. I love that. That means that you are looking at trading seriously. That means that you are already a passionate of the market. So always puts a smile on my face when we all get together here. You know, the passionate traders here. Okay, I love it. Thanks for that. So anyway, going back to WebTrader. Okay, we can see the trade with crude oil is here now. I placed it with TradingView, but it shows here. We talked about this before, so that is great. Okay, and I think that before I do another trade, maybe because I am seeing that additional group of people has entered the room a bit later, so I will want to show you one more time, while I take another sip of water, the QR codes that I displayed at the beginning of the session, because some of you may have missed it, since City Index is running this promotion, so you can go and take a look in case this is of your interest. Okay, you can scan the QR codes. You also have the direct URL in the bottom part of the screen, so you can use that and find a promo on the website as well. Very good, perfect. Okay, so back to the charts, and let's see if we can find another trade. So I'm going to stick with this style, 4 hours and 15 minutes, and I'm going to go down the majors. So I'm going to be looking at the Aussie dollar and see what's happening. Aussie dollar in a confirmed climate to the downside. So similar setup compared to crude oil. We have the EMA located here at 64.07. On the 15-minute time frame, there is nothing. What about on the 1 hour time frame? There is a UFO. Basically, the blue line is located at the end of the UFO, and the blue line represents a moving average, which, as the name suggests, is moving, and that means that if the Aussie goes up, then the moving average will go up too, and then it will be outside the UFO range instead of inside. So I'm going to pass on the Aussie, even though the setup doesn't look too bad, but it would be a little bit too risky for my liking. So with the euro, we are in a down climate, and certainly shorting feels appealing, but at the same time, I guess you would agree with me that we have so many red dots, okay, so many red dots that this is kind of like a way to think of this market is probably getting very tired on the way down and probably going to have a short-term relief before maybe keep going. So I prefer to catch the next wave to the downside or the next wave to the upside instead of getting now short, which it may keep going down, but it's already fallen so much that I may be late to the party, right? And because there are more currencies, I don't need to force it. I just click on the next symbol and see what happens. Look at that. The pound just started a down climate, okay? Just started a down climate, and that is certainly something I see with much more happy eyes. Let me go like that. Okay, 1:15:60. Here we go. And on the 1 hour time frame, notice how we have the blue line inside the UFO, but same story. It's located very close to the end, so I'm concerned about that a bit. Let me take a look at the 15-minute time frame and see if we have a better setup there. And to be honest, the 15-minute time frame kind of confirms my fear, which is that there are on-field orders below, but not that many above. So here's what I would do with the pound. Okay, so this is going to be homework for you, my friends. So what I would do with the pound is I would wait 2 hours and 16 minutes, okay, and 24 seconds. You're going to be like, why is that? Well, because in 2 hours and 16 minutes and 24 seconds, so the 4 hour time frame will complete this candle and a new candle will begin. And because this is a down climate, so what's going to happen to the EMA, which is currently up here, is that the EMA, which moves, the EMA will be going down like this. So my blue line is going to be here, and therefore here means it's going to be in the middle of those UFOs, which is going to be so much better than being above the UFOs. So therefore, patience apply to the pound, even though it is the setup is being formed. It's just a matter of just being a bit more patient. 2 more hours, and you'll be ready to go. With the Kiwi, On the 4-hour time frame, we got a thin dot, so no time to trade, no statistical advantage. With the loonie, Canadian dollar, we got an up climate, which is confirmed, but again, many dots on the way up. So I would prefer, just like my comments about the Aussie dollar, I would prefer a change of climate. With the US dollar Swiss franc, same story, many blue dots. So I'm just gonna pass. And with the US dollar Japanese yen, which is the one that produced a beautiful profit last week, we caught all these move on the way down. We caught all of these. Okay, our entry was here, and we caught all of that move all the way to 146 or something like that. So that was a beautiful trade. So we are now in the opposite climate, going up. But again, it's been in that climate for a very long time. So I'm not very happy about that. Okay, so in the 4-hour time frame, these currencies, these markets are not making me happy enough. Okay, so what are we gonna do? No problem. You can either be patient and wait a couple of hours and come back, or trade a lower time frame. I mean, you can also trade cross pairs. Okay, there are many more cross pairs here. I'm just gonna pass on those. Okay, nothing wrong with those, by the way, but I'm just gonna pass just to keep it simple. We got 15 minutes to go in the session, so I don't want to overcomplicate. And I'm gonna be looking at the US dollar Japanese yen in a 1-hour time frame, and I also have a bit too many of the blue dots, so I'm gonna go for the Swiss franc. Okay, many of the blue dots, the Canadian dollar, many of the blue dots, Kiwi. That I like it. With the Kiwi, got 3 dots, okay, which are red and confirmed. So I'm gonna go ahead and apply using the moving average a horizontal line, okay, and then look on the right to see if I find my UFOs. Now on the 15-minute time frame, I find no UFO. Okay, so what about the 5-minute time frame? No UFO. Okay, no UFO. And to be honest, if we did this trade 2 hours ago, out of curiosity, okay, but if I go back in time to here, if we did this trade 2 hours ago, okay, we got that UFO there. Let me see. So price came in exactly, kissed that UFO, and from there felt very nicely. Okay, so this is the type of setup that we're looking for, right? So again, that was an hour or 2 hours ago, okay, which the climate had already changed to red. So we are still in the same market environment, and I'm looking for a setup of that sort. Unfortunately, this line is not lining up, okay? But you know what? I may find it on the Aussie because the Kiwi and the Aussie are highly correlated. So you know what? Let me take a look at the Aussie, and maybe I have that set up there. And you see the difference is that with the Aussie, I got many of the red dots already. So while it could continue falling more, I mean, look at how many red dots you got here, okay? The fact that so many red dots already took place decreases the probability of these to fall so much more, right? The more the dots, the less likely it will continue. So yeah, I really like the setup with the Kiwi, but here you need to use patience and wait for a red UFO to form. This, by the way, my friends, could happen anytime because the auto UFOs is a patented technology which is working with real-time data, and you know, a red UFO like that may show anytime, enveloping the blue line, and then that's it, you have a trade. But at this moment in time, as we are discussing it, it's not there. Okay, I got the line, but the UFO is above. Okay, so we need that enveloping condition, we need that confluence to make the setups to be better. Okay, so what about the euro? Well, the euro on the 1 hour time frame is going down for 3 candles. Okay, so that's nice. I like that. So that's like the Kiwi, isn't it? So let's go ahead and take a look at the EMA and project it and look at that. We got that EMA being enveloped by this UFO. So that's cool. I like it. What about the 15-minute time frame? Here we go. We also have a 15-minute time frame. So we have a 5-minute UFO inside of a 15-minute UFO. So plenty of sell orders here in all these price zones. So okay, I'm happy. I'm happy. Let's go ahead and take a look. If I was to do this trade, where would my target be? So 98.80, which is that green UFO, Makes a lot of sense, isn't it? 98.80. So let's take a look. Let's put the parameters on the screen and see if we approve or not this trade. 98.80. That's the target. 99.23. That would be the entry. And the stop, let's make it 99. Let's call it 35. So that's like a 4-to-1. So certainly I'd be happy to take one of those. And therefore, with $100 of risk, I'm just going to go for it. Okay, so I'm just going to place the order and go for it. How is it going so far, everybody? Please give me a feedback. Again, even if all is good, just type okay, or just anything, the shortest word you could imagine. Okay, I don't want to make you work too hard on typing on the chat box. You don't need to explain every detail of your thinking, but certainly I need to know if you're with me or not, in the sense that, again, the goal is that you are learning what I'm doing, so then you can implement that by yourself, so you can have good trades, you can have good executions, you can have good, proper risk management, all of those things. Okay, so I want to make sure that I am understood, so that way you can do your own homework when the sessions are not running. So we got 99.23, 99.35, 98.80. So I'm going to place the order here for the euro. Okay, so entry with a stop. Okay, and the target is below here at 98.80. I will leave this on the screen in a minute in case anyone would like to take a screenshot. Okay, thank you for that, Jeff. This is great. And by the way, as I'm getting ready to plan what probably will be the last trade of the day, I wanted to remind everyone of what I said at the beginning of the session, because not everybody was here, which is the fact that while today we are conducting the session starting at 9 p.m. Singapore time, starting next Monday, the session will run at 7 p.m. Singapore time. Oh, we just got filled on crude oil. Okay, so I guess that we're going to go and take a look at that. So we got filled on crude oil. Thank you very much. I love it. So that was a trade based on a 4-hour time frame. Okay, that was a trade based on a 4-hour time frame. And I think we were using the 15 minutes or something like that. Yes, correct. So price came inside the UFO. Okay, and now, you know, the expectation is that it's going to react to the UFO. Ooh, bad news, my friends. Notice how the UFO is gone. Again, auto UFO is real time. So the fact that the UFO is not on the screen anymore, it's a very bad sign. So if no unfilled orders are entered immediately, this trade is likely going to lose. And actually, a valid action, depending on your, I'm not going to do it, but a valid action, depending on your trading rules, is that you just jump in and you cancel the trade manually. So instead of losing $100, this trade will lose you 74. Okay. Now, of course, there's always a possibility, because the climate is down and we are trading where the EMA is. There is always a possibility that the large market players come in with very large stacks of unfilled orders, and next thing you know, you're going to have UFOs show up on the screen again in a few minutes, and then this market is going to fall and work according to plan. So this could certainly happen. And there is nothing to be scared about here. Worst case, we're going to lose $74.40. So not a big deal. But at the same time, just know that the fact that the red UFO is gone from the screen is certainly not something that we appreciate, because it reduces the probability of the trade working out. Okay, but you can see how the climate and the EMA are doing their job. While we don't have evidence of unfilled orders yet, certainly all those residual unfilled orders did work. When it comes to stopping crude oil from going up. It was looking like it was going to the moon with these, very large green candles. And notice how the UFO said, crude oil, stop it here, right? And from there, you can see now how price action is trying to go down. So we'll see who wins. If the buyers who created this push to the upside that are certainly out there in the market, or the fact that the climate was down, which means that overall you got sellers in places, and those sellers are going to kick in and continue pushing it down. So we'll see. And since we got very little time left, I guess I'm just going to stay in the screen. So if we get stopped out, we'll see it. And, I'll be able to maybe comment on it, or if you have questions around it, we'll be able to discuss it. Most of the times when we do trading sessions, we comment on the winners, not the losers. Today, it's a beautiful educational opportunity. Obviously, it's a better opportunity for trading when it's a winner. But for training and coaching purposes, it's a great opportunity. And certainly, I'd like to leave it on the screen. Give me a moment, guys. Sorry for that. I'd like to leave it on the screen for a moment. So if we get stopped out, we can then comment on that. Okay. So far, you can see it's a very intense fight, and we just got stopped out. Okay. So again, a very active trader here, which, as I said, I didn't, but a very active trader here could have, the moment you saw the red UFO go away, you could have jumped in and closed the trade. It would still have been a loss, okay, but the size of the loss would have been less. So that certainly would be a good thing. Now, with the type of move that we are seeing, while it's never pleasant to get a stop out, I am very happy I'm out of this trade, because if you look at the strength in the opposite direction that we are seeing at this moment in time, well, guess what? This is very, very, very likely leading to a change of climate, right? So if you look at auto climate here, and I zoom in, notice what happens almost every time when we have one of these gray lines. You have one of the gray lines going down, and the color was blue, it changes to red. The color was red, gray line, it changes to blue, right? It was red, it changes to gray, it's blue. Blue changes to gray, is red. So what's happening now, right? I mean, we need to zoom in more, to be honest, okay? So we see it because it's just happening. But technically speaking, you see, if I put my mouse here, it's a negative number. So in other words, we are starting to show a little bit of a gray little Q pointing down, and that it's a sign which potentially suggests that we are very likely going to see a change of climate in 2 hours and 3 minutes from now, which is when the 4-hour time frame will close and a new candle will appear. Okay, so we still need to wait, but again, I don't want to be short anymore, given what just happened here, because we are potentially going to see a change of climate. So again, I love these things. Okay, when you pay money to the market in the format of being stopped out, and you just give some of your money to the market, right? So at least you gotta gain some information, some sort of an insight that helps you to plan for a better trade next. So in this case, being stopped out here, it's certainly something that is telling us a lot when it comes to, hey, the market is probably going to change climate. Okay, cool. So look, I wish every single trade that I give you is a winning one. I mean, that doesn't happen to any trader in the world. Definitely not my trades when I trade by myself. And again, I don't know any trader in the world that only profits. You always have a collection of losses. So obviously, I wish in these coaching sessions that my trades can always be profitable. That is a utopia. There's no way that's going to happen. So I'm happy that if the trade was a stop out, it happened with us together. So we could discuss it, and you could understand what it meant, why it happened, and so on. Okay, so you may have questions about it. By the way, we will be concluding the session in 3 minutes. If you have any question, this is the time for you to type. And that way, you give me time to give you the answers. Jeff, yes, it's going up, exactly. And do we always look at the 15-minute time frame? No. Earlier, if you recall, when I was planning on the trade, I was looking at the 1 hour and the 15. So I'm always combining a larger time frame, okay, a larger time frame combined with a smaller time frame. Okay, and by the way, in your case, Jeff, and I know this, and by the way, I owe you an email. You are attending our Forex course, isn't it? And you are also reading our Forex book. So as you go through the contents, you will see the specific use of the time frames. To be honest, the way I prefer to do this is to use a Fibonacci time frame, which is the 21-minute time frame. Okay, which is a time frame that gives you a little bit of an extra insight. It doesn't mean it's magic or anything like that, but out of curiosity, if I had looked at the 21-minute time frame, so notice how the UFO was there, okay, as well. Then price sorry, I went too fast. When price approached here, Okay, when price approached. Okay. You had a similar picture and a similar effect. So no matter if you use the 21-minute time frame or the 15, the effect would have been the same. So why am I using the 15 in the sessions? Because I understand that not everybody that uses TradingView here has a paid account with TradingView. And to get the Fibonacci timeframes, you need a paid account. I do, but you don't have to. But with the free accounts, you can certainly use the classical standard 15-minute time frame. So in order to align myself with you guys, I am using the 15-minute time frame, and you can see that while there are differences from time to time, the differences are very subtle, and you don't always see differences that are that big. All right, so that's kind of like my answer to you. I don't always use the 15-minute time frame, Jeff. I prefer to use the 21. But to be honest, it's not that big as a difference, okay? And even if you were to use the 1 hour time frame, which instead of 1 hour, I would rather use 55 because of the Fibonacci time frame, okay? But again, the 55 and the 1 hour is similar. So again, that's what I've done before, right? So I was looking at the 4 hour time frame on the left to check for climate conditions, so I know if I should be a buyer or seller of crude oil. Being a seller, seems the right thing to do based on the climate. But again, in 2 hours time, I would expect it to be changed given what happened to this trade, okay? Because the fact that we got stopped out the way we did is because there are many buyers in the market, and that's the beginning of a new climate. So that's probably going to be seen in 2 hours time. Yeah, so we just hit the top of the hour, so I believe it's time to say goodbye. Good stuff today. We got, just to summarize, we got a trade on the Canadian dollar. This is an order waiting to get filled for longer term trading while we get paid swaps. We got a trade on the euro, on the S&P 500 index. That's intermediate term based on a daily climate instead of weekly. We got a trade set up on the euro based on a short-term climate, 1 hour. And we got a trade on crude oil based on a 4 hour time frame, which triggered during our session while we were here live together. And that was a stop out. Okay, so that happened while we were together here, which was a great learning experience. Hopefully it was for you guys. See you soon. Thank you for attending. Thank you for joining me, flashing the QR codes one more time in case you joined the sessions late, so you can go take a look at the CT Index website with those QR codes or the link below, tradewithufos.com/CTindex. And see you next Monday. Remember, 7 p.m. Singapore time. It's not going to be 9 p.m. Singapore time. It's going to be 7 p.m. Singapore time. See you next Monday. If you have any questions for me, my email can be seen here on the screen. So feel free as well to email me anytime. And happy to help, my friends. I'm very passionate about this. So do not be shy at sending me any message or any question that you may have, okay? And I'll guide you into, what the answers are or what to do or what not to do. Take care, everyone. See you next week. Bye-bye.